Welcome to Fear and Greed, business news you can use. Today, interest rate cuts are off the agenda after a surprise jump in inflation. The Labor government in last-minute talks to push through an overhaul of environmental laws, and super funds get a warning from regulators about improving service for retirees. Plus, Harvey Norman shares surge on the back of a jump in sales. And a German parking meter attendant accused of stealing $2 million from parking meters. It is Thursday, the 27th of November, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
A little levity to the show. This parking meter story, my favourite of the week, I think.
$2 million from parking meters. We'll get to that a bit later on. The main story this morning, Sean, anyone hoping for another interest rate cut is going to be deeply, deeply disappointed this morning, after a jump in inflation pretty much wiped out any chance of the Reserve Bank changing monetary policy anytime soon.
I'd even go further. If inflation figures like yesterday's keep flowing through, then we'll be looking at rate rises. Headline inflation accelerated. We didn't want to hear that. To 3.8% last month in annual terms, well above the Reserve Bank's preferred 3 to 4%. Sorry, I'll say that again. 2 to 3% target range, 3.8%, above the 2 to 3% target range and above the September reading of 3.6%. Housing, due to electricity prices following the end of rebates, so they rose. So housing and food were the main contributors to annual inflation. The underlying rate, which takes out those more volatile items, came in at 3.3%, still above the Reserve Bank's target and an acceleration from the previous month. It pretty much demonstrates the widespread nature of price pressures in the economy at the moment. Not much to like about yesterday's Bureau of Statistics data, Michael. Services inflation tends to be stickier than goods inflation. That's rising. That's bad news. Even outside energy costs, other housing costs continue to rise, and that's very much front and centre when it comes to cost of living pressures.
It's extraordinary, isn't it? When you get a result like we had yesterday, you see the reaction play out really, really quickly across markets, across the Aussie dollar, everywhere really. What happened?
Bond markets moved immediately. They're pricing in just a 23% chance of another rate cut by the middle of next year. It was about double that level ahead of the release of the data. The Aussie dollar jumped against the greenback to be buying more than 65 US cents, with rates expected to fall in the US, not change here in Australia, maybe even go up. The local currency should be supported in the short term at least. Federal Treasurer Jim Chalmers, not really happy, said inflation is higher than the government would like, but added that price moves were partly being driven by temporary factors. He was trying to put on a good news face. There was no good news in the inflation data.
It's a hard one to spin, isn't it?
Totally. The October reading yesterday was the first complete monthly set of figures. It's going to replace the quarterly set of figures. Market economists did say they're going to be more volatile over the next year or so you don't get seasonally adjusted figures in some areas. That'll take 12 months to kick in. Even so, several basically came out and said a rate hike is now a real possibility next year.
Yeah, and there's UBS and Barrenjoey and other, like,
good economists.
Yeah, this is not a good sign.
Well, Michael,
I'm self-interest, Sean. I'm thinking about my mortgage. It is not a good sign for me.
That's very true.
Yeah, okay. The share market. What was the response there?
Plenty going on in the market. Initially, it opened much higher yesterday, up more than 1% following a strong lead-in from Wall Street. The inflation data hit at 11:30 a.m. Market fell sharply. Interest rate-sensitive stocks hit most. Then for most of the rest of the session, the market regained ground. The S&P ASX 200 eventually closed up 0.8% to 8,607 points. The materials, consumer discretionary, healthcare indices did best. The materials and consumer discretionary certainly helped. Well, actually, that's not true. Consumer discretionary shouldn't be helped by that interest rate news. But there you go. Anyway, we had some pretty good retail figures out yesterday from Harvey Norman, which we'll get to. Maybe that helped that one along. Utilities, tech and telcos underperformed.
All right. Now, in politics, the Labor government, including Prime Minister Anthony Albanese, was last night in talks with the Greens and the Coalition over the passage of new environmental legislation.
Environment and Water Minister Murray Watt headed the negotiations with both the Greens and the Coalition, though later in the day, Prime Minister Anthony Albanese got involved. The government negotiated with both groups. Watt offered the Coalition 5 changes, including retaining existing approval pathways for certain medium-sized projects, imposing a 14-day cap on stop work orders imposed by the new Environment Protection Authority and clarification around penalty orders. Now, the amendments for the Greens, they were more around removing fossil fuel projects from fast-track approval pathways and ensuring they could not be subject to a new national interest exemption from environmental laws.
Plenty still to come, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the gap between the best and worst super funds in terms of servicing members is widening, according to regulators, a situation that has really become critical with 2.5 million people expected to retire over the next decade.
ASIC and APRA yesterday released a review of the super sector and warned that too many super funds have put retiree savings at risk because service levels remain poor. It is particularly relevant because so many people are approaching retirement. They need help. There was legislation introduced 3 years ago that forced funds to come up with strategies for their retiring members. Now, those strategies and advice are supposed to help members plan for the decades in their retirement. While some super funds are doing more to help people at retirement age, a bunch of others are not. The gap between good and bad is widening, and the regulators are not happy.
You do discuss this today in Fear and Greed Q&A with ASIC Commissioner Simone Constant.
Yes, so we talked to Simone about a couple of things. The private credit report that came out a few weeks back and what that means for private credit for investors. Then we move on to what came out yesterday just about the gap between the best and worst super funds. Great chat.
Yeah, it really is. It's worth sticking around for. It's coming up after the show. Harvey Norman. You mentioned this earlier. You teased us with it. They've reported solid sales growth, while online retailer Temple & Webster has disappointed. Wow, what a result yesterday, continuing the run of mixed results for retailers.
That's right. So Harvey Norman posted a 9.1% increase in aggregate sales revenue from July 1 to November 20. Like-for-like sales are up 8%, a bit over that. Harvey Norman operates across Australia, New Zealand, Slovenia, Croatia, Ireland, the UK. It's got partnerships in Singapore and Malaysia. It triggered a big jump in Harvey Norman's share price, one of the best of the ASX 200 yesterday. At Temple & Webster, notwithstanding an 18% jump in revenue during the period, the outcome very much disappointed investors. Its share price fell, I think it was 30% or something by the end of it. Unlike many retailers, December is a quiet month for Temple & Webster. People focus on buying Christmas presents, not homewares. Tables. That's exactly right.
Specifically tables. I don't know why that came to mind. Didn't you? Cool. Yeah, you were a big Temple & Webster shopper.
I haven't bought there recently, but when we were renovating that, big fans of Temple & Webster. Oh. And I like their stuff, but it's just kind of cool how you'd think all retailers should win at Christmas, but not Temple & Webster.
No, okay. Now, Brookfield and GIC, the Singaporean sovereign wealth giant, are forming a consortium to bid for National Storage, which is the real estate business that owns a string of, well, as you would guess, self-storage sites across the country.
Media reports suggest the bid will be $3.2 billion. National Storage went into a trading halt yesterday. Now, recently, a consortium bid $2.3 million for Abacus Storage King, that business. Self-storage, very big business at the moment. In fact, I know the guys that started Storage King.
Really?
Yeah, they both worked for Jim Miller, like Miller's Storage.
Okay.
And they went out on their own. One has very sadly passed away since then, but they sold to private equity. And they did very well for themselves. Great service. And I remember that the guy's name was Michael Tate, who the surviving member, and he's a young man still, Michael, but he was a great one for service. And he said, the thing about storage, people want good service. And so do the people that, owned those, the big sheds around the country.
Yep.
Service them, service the people, and they did really well out of it. Good on them.
And they've become really high tech, the storage centres, because we've been using one that's a fairly new build. God, the technology involved in all of those. It is incredible. You just kind of think storage, you think kind of a dusty shed, you lock it up and away you go. No. The security, all of this stuff, top notch.
The dusty shed, lock it away. I love that TV show. I can't remember the name of it. But they go and buy the contents of the sheds.
Yes. Yeah. And they can find all kinds of things. And you might buy the entire thing for $500 and find a chest full of rubies.
Yeah. I don't think that's ever happened, but they could.
I think I'm still thinking about the
shipwreck from yesterday.
Yep. They're worth £15 billion. Anyway, wow, we went off topic.
We did.
Woodside Energy has done a deal with the Timor-Leste Petroleum Ministry to progress an LNG project for the Southeast Asian nation.
Very significant for Timor-Leste. The complex, which would cost several $1 billion based on similar projects, would involve a 5 million tonne per year LNG plant, a domestic gas facility and a helium extraction unit. Previously called the Sunrise Development, now called TLNG. Production could start as early as the early 2032, basically. The deal comes after Woodside dropped its insistence that gas from the Timor Sea field be developed through an existing LNG hub in Darwin. The Timor-Leste government, which owns a majority stake in Sunrise, it bought out Shell and ConocoPhillips 2018, I think. It argues that gas must be piped to a plant on its southern coast, generating jobs and economic activity. Basically, it looks like it's getting the go-ahead.
Okay. One for the travellers, Sean. That's really most of us, isn't it? Flight Centre Travel Group has launched World 360 Rewards, which is a new national loyalty program that offers points on every travel booking across its brands and more than 300 partner companies. It's quite big.
Yes, free to join. You can earn these World 360 rewards on flights, hotels, cruises, tours, etc. Basically, you can stack your rewards alongside your airline frequent flyers. You don't have to have one or the other. I like that. There's a paid member tier. Now, I get that this sounds like I'm a promo for Flight Centre, and I'm not under any. Absolutely not, right?
No.
Point is, consumers can shop around big time, and they get some pretty good benefits at the moment. So right now, global airlines have a massive Black Friday sale on. Oh, Michael, you're getting very excited over there.
No, I'm getting. This is my gripe. I saw the story yesterday about all of the big airline international flights, Black Friday markdowns, Qantas. I think Emirates might have been doing it, like all of these ones.
Singapore.
Yep. And so I thought, you know what? We're planning on going to the US in October of next year. Jumped on. Somehow, the flights that I want have actually gone up in price. And so I am the only one that does not benefit from Black Friday. So I am protesting and not booking anything.
Point is, look around, shop around. You can get some good deals.
Yeah, thanks. Turning to international news now, Sean, and US President Donald Trump will send Special Envoy Steve Witkoff to meet Russian leader Vladimir Putin in Moscow in another push to secure a peace plan to end the Kremlin's war in Ukraine.
The US president said his negotiators had made tremendous progress in ending the war, but he would wait until a deal was within reach before meeting Ukraine's leader Volodymyr Zelensky and Putin. Trump's remarks came just hours after Russia signalled it could reject a modified US peace plan to end the war if the proposal did not satisfy Moscow's long-standing demands, even as Kyiv indicated it had agreed a framework with Washington, according to the Financial Times. Now, the initial 28-point plan, significant concessions to Russia, sparked deep alarm among officials in Europe and Ukraine. Trump earlier in the week said that the plan had been drafted by the United States and had been fine-tuned with additional input from both sides. He added that there are only a few remaining points of disagreement. I think we will only know whether that's the case when we hear from the leaders of the two countries, Russia and Ukraine.
All right. We are finally there, Sean. It is time to talk parking meters. A parking inspector and his wife have been arrested on suspicion of embezzling more than €1 million, or about $2 million, from a small German town's parking meters. It wasn't even from a big city.
No. So the municipal employees thought to have taken coins out of parking meters in the town of Kempten, I quote, on numerous occasions.
Well, I would assume it's not all in one go.
And placed them in bank accounts that his wife had access to. Now, local police are saying, a money laundering report by a credit institution alerted investigators to the suspected theft. The inspector faces charges relating to 720 alleged incidents of theft, same number as his wife is facing. 720 to get €1 million. That's...
It's still a big bag.
It's still a big bag of coins
that you are lugging into the bank, and surely the bank would get a bit suspicious. Oh, here comes Wolfgang again with this bag of coins.
In October, the Kempten Public Prosecutor's Office was informed that cash was repeatedly being deposited into several bank accounts, according to German news agencies DPA, as reported on the BBC. Police then searched the office's premises in the early hours of 24 November. Same day, a 40-year-old man, 38-year-old woman was arrested. I like the end of the story. It's not clear how long it might have taken the couple to accrue the sum. A long time. That's what I'd say.
That is a fantastic story. Good way to finish. Up next is the Fear and Greed Q&A. Today, Sean, we mentioned before, Simone Constant, ASIC Commissioner, is your guest today. It's a great chat. It's coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you sign up for the free daily newsletter. I'll also put a link to that one in today's show notes, so it's nice and easy to sign up. Thank you, Sean.
Thanks, Michael.
It's Thursday, the 27th of November, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.